Here we are on the $yen 15-minute time frame. It's a trade I've just got in live and it's a low and tight flag, and it's actually happening at a major structure level and a psychological number. Now usually I'd wait for the for it to break structure to give me an idea of if we are going to break through it or whether or not we're going to double bottom, but in this instance I have sold it in anticipation that we're going to break through it. I just want to do the top down analysis and explain why I've taken this trade. So here we are on the daily time frame and we are in consolidation. So what happened is we made this low, then we came up and we violated this level here, but since then we have just put in a lower low, lower close candle. Now if we then drop down the time frames, what we've actually done is, if I put a structure level on here, we actually have a very well respected structure zone, and it comes in at the 111 even. Now this level has been respected multiple times in the past. If we zoom out, you'll be able to see that we have areas here that it's been respected, and I was looking to short this market based on the 60-minute time frame. Just on the 240 though, something to look at here is that the market came down, and look at where the wicks are here. Okay, the wicks are there, and we haven't actually made a new structure low, but we've actually closed within the wicks. So this could mean a couple of things. It means that we've pushed down further than I would have originally anticipated, and in this instance I would only be looking for two things. I'd be looking for a last chance double bottom within the wicks on the lower time frame, or I'd be looking for a head and shoulders. Now if we don't get either of those, I can then go to plan B, and that is look for a shorting opportunity. Now here on the trading time frame, the 60-minute, you can see that this isn't a double bottom for me. I need to see something where we have more of a V point like this. This for me is just sideways movement, and the trade is actually happening on the 15-minute time frame. And if we drop to it, you'll actually see that we have sideways movement. So what I'm looking at here is we've had a move lower, and from there we have then moved sideways in a channel like this. And so we can look and say there's our first touch, first, second, second. We've just made a third touch up here, and quite importantly, this is a high test candle. This is a very big inverted hammer, and straight after it we've had a lower low, lower close. So this is indicating to me that there's no double bottom, there's no head and shoulders here. So plan B is, could the market go lower? And we've just had that high test candle, and as I say, the lower low, lower close. And so if we bring on the entry details, you can see I've got involved just as the market, just as we got the lower low, lower close, stops just above this big spike here. And then targets, well, targets, I've gone for conservative targets here, and if I zoom out and put a structure level in, you'll be able to see that we come in right at this zone here, and we do have it respected as well throughout, and we're at the number 110.66, so no psychological number. We do have the potential to go a little lower if we throw a fib on. Oh no, in actual fact the 127 comes in just a few pips below that, but I'm going to be taking targets at 110.66. So what does that mean for the risk and the reward? Well, let's go back to the 15-minute time frame, because that's what we took the trade on. Okay, it means that we're risking this much. I'm going to make that red for risk, and first targets are going to be there. I'm going to make that one green. So we were risking here 19 pips for a potential of 33, so a very nice risk to reward there, and we'll come back and see if we can turn this trade into a winner. And we're back on the dollar yen, and it hasn't been too long until we got the breakout. So we had this candle hasn't closed yet. It will do in a few seconds. It's a 15-minute time frame, and hopefully we can push down here and hit targets. And I think it's quite good to see when your analysis comes off. In fact, it's more than quite good. It's nice because it gives you belief in your system and belief that you're able to read the market and be right. For me, more than 50% of the time. In actual fact, I'm actually right a lot more than that, but a lot of the time I can't get involved in the trades, and what I like to do is just simply look at opportunities, and while I know I may not get an entry reason, is just simply look at where I would have put my stops, entries and targets, and then just monitor and see what would have happened. But we can clearly see that on this trade we got the breakout, and I think I went through the trade fairly well, looking at the two possibilities where I could have bought it. Both of those were invalid, and I then look at the selling opportunities, and it gave me that selling opportunity, and so here we are. So hopefully we can push down a little further to hit targets. I do need to go within 2 pips of my target to move to break even as well. So we'll come back to this and just hopefully catch the last bit as we hit targets. And we're back for the final part of the video. I'm a little late recording this section, and I'd already deleted off my workings out, but this was the trade. Targets were at 110.66 and price came down to 110.69 before coming back up and stopping me out for break even, so just 3 pips away from target. Why did it turn at that point? Well, if we look at the structure level here, we didn't quite hit. Where's the 127 coming up? 127 is a lot lower, so just one of those trades that came close but never actually hit, but I was out of that trade for break even.